Akshay here. Welcome back. I want to talk about a little bit more detail about our vision about building the asset exchange. I've talked a lot about our licensing and I've talked a lot about our lending platform and why that's important. But today, the third piece, which is probably the end game, if you will, is to talk a little bit on the asset exchange. Now, asset exchange and asset in general is a very broad term. It encompasses everything from your car right up to financial assets like mutual funds and stocks. And we are today going to talk about mostly the financial assets, obviously, right? As you will see in this chart that I'm displaying right now, the if you look at even that universe, there are things which are liquid and relatively transparent, which is on the top left, and then there are things which are on the bottom right, which are large, such as real world assets, such as private equity, which are just not transparent. And we want to, as part of our asset exchange, we really want to go to that side of the spectrum. And why are we going to that side of the spectrum? What are the problems you're solving? I'm going to come to that in a bit. But just to give you a sense of the size of the market, the total asset management business in just Asia Pacific, excludes China, is $3 trillion. So for perspective, just the US is 10 times the size of this market. And that's because Asia as a region is growing, the wealth is just being created, assets are being created, and there's a lot more education that needs to happen to kind of bring some of these assets into the market. Now, let's talk a little bit on the assets and what the problems that are as we see them. Now, if you see the asset exchange, the real world assets, think of them as property, think of them as secured loans, think of them as loans to companies or governments. A lot of them are currently done on a bespoke basis. What I mean by that is the loan sizes are large. They will typically have an investment bank that the borrower will have an investment bank that will come in, create a massive due diligence deck, charge them upwards of 5 to 10%. And then that is then sold or broken in chunks and sold in chunks as large as $1 million or $2 million to large institutional investors, right? And the fees are then obviously much higher. So the average person does not have access to some of these things, some of these assets that are there. What we want to do is to kind of remove both of these things. Number one, bring much more transparency and standardization in the way some of these assets are done. And secondly, make sure that the ticket to entry into these assets is much lower. Our hope is that, let's say, Singapore government launches a bond deal. Right now, the minimum is 200,000 Singapore dollars for a person to kind of invest in that. There's nothing stopping us from having even $100 chunk for a person to do it. Now, the reason that these markets are very illiquid is for two reasons. One is just historically, they are where most of the fees have been made in the financial industry. The second one is it's actually sometimes very difficult to break these into smaller sizes because it becomes cost inefficient if I have to deal with 10,000 people each holding $100 as opposed to one person holding $10,000, right? So just historically, just from both from a borrower standpoint and from an investment bank standpoint or the deal manager standpoint, they try to kind of go for the larger institutional players in this. Now, we believe that with the advent of blockchain, a lot of these issues actually can be solved and have not been solved by the traditional institutions yet. So, for instance, the way we see it is if an asset comes in, we will standardize it. There are some assets which we reject because they're just too very different. But 80 to 90% of the assets that we expect to bring in are very, very easily standardizable. We will standardize them, give them the basic terms like what the collateral is, what the principal is, what the jurisdiction is, what are the recourse that you have, what is the potential interest return that you have, and even what some of the what our internal ratings are about that, right? So we put that in a standardized document, and then we break this quote unquote asset into small tokens. So each token of ours, or CG coin token, represents a fragment of the loan. And once that is broken, and then there is no limit to how small the fragment can be. We are currently assuming it to be $100. Once that loan is broken into its tokens, then it is put onto the listing, and then the average person, rather than waiting to kind of invest $200,000 in that, could invest as little as $100 into a loan or an asset and become a lender. Now that's a completely different ball game and mindset of how these illiquid, not non-transparent asset classes have been done till now. Right now, as I said, it's all large institutions selling, large corporates selling to large institutions, and the middleman, the investment bank, making a ton of money. What we're trying to do is with the tokenization of this, it literally democratizes this, and then every potential investor, every potential individual in Asia, or for that matter, the world, could become a lender for some of these borrowings. So that's great for both, both for the borrower, because the pool of lenders massively increases. You don't need to just go to, I don't know, Citibank or JP Morgan to kind of get your thing. You can probably just put it out there and let the world kind of evaluate you and give you their investment. And the cost of doing that is actually not very high, because on the blockchain, everything kind of, there's a record of which fragment of the loan is owned by whom, right? The second thing that the exchange also does is it allows you to kind of exit out of the loan. Right now in these markets, if you hold the loan, it's very difficult for you to find a buyer, which is what is known as the over-the-counter trades. You have to literally know the other party who is a potential buyer, and you will have to say, hey, you know what, I need to get liquidity, or I need to get out of this loan. Would you be willing to buy that? And typically what happens is that the purchase is done at a discount to what the value is. And you, as a holder of that loan, will get shortchanged. What we're hoping to do is, once the exchange comes in, there is a ready market of buyers and sellers, and it's just like any other exchange. You are exchanging stocks, you're exchanging foreign exchange. From now on, you could potentially be exchanging fragments of loans for borrowers, and that again makes the whole process much more transparent and liquid. And because it's liquid and transparent, the discount that you have to take in case you want to exit out of that is significantly lower. And what it also does is it reduces the fees for the middle parties, because they're not out there looking for bespoke lenders or borrowers for you, right? So really, what we kind of really thinking about in a lot of ways, if you've ever seen ETFs and how they've grown in the stock market, we're trying to do that same kind of democratization and low fee structures onto the real world assets. ETFs, for perspective, took on the mutual funds, and globally the ETFs from I think under $500 million in 2003. Last year they had a asset size of $3 trillion. So that's just insanely big. And that's purely because of exactly the same things. They allowed the average investment size to kind of get reduced. The fee structure that the mutual funds were earlier charging between 5 to 7% sometimes were down to 0.5 to now even 0.01 on some of the large ETFs in the market. We're trying to do exactly the same for real world assets. The aim is, if you as a borrower are paying an investment bank between 2 to 3% fees on a $100 million loan, we can probably be able to kind of do that in less than 0.1%, right? And you as a lender, as the average person, will start having access to some of these assets, which you would never have had earlier, because you wouldn't have the ability. Nobody's coming to sell this to you, so you wouldn't even know that they exist. And if they did come to you, they would ask you for a quantum of money which is very, very significant, and we want to make sure that that quantum of money goes down. So as I see this, our asset exchange really completely revolutionizes how we would kind of approach these asset markets going forward. So I hope that kind of gives you a little bit more perspective, at least where we're kind of taking this. And if there are any feedback or comments, just do give it to us in our comment sections below.